and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be discussing the market cues that are coming in this morning, whether or not the Fed will look at another interest rate hike in its March meeting, given the fact that US CPI has come out last night. And of course, we'll also be getting all your stock-related queries answered by our expert on the show. So if you have any queries, let us know on our live feed and we'll have them addressed by our expert. But before all that, let's take a look at the top headlines at this hour. US consumer prices rise 0.4% in February and 6% on a year-on-year basis, meeting expectations. However, core CPI remains elevated. Dow breaks a 5-day losing streak. Banks continue to rally as contagion fears ebb. But Nasdaq, on the other hand, gains over 2%, even as Meta says it will lay off 10,000 more employees. Asian markets trade largely higher after a positive handover from Wall Street. The SGX Nifty too is indicating a gap-up start with, in fact, SGX Nifty at somewhere around 17,200 at this juncture. Brent crude prices hit their lowest level for this year to trade at about $78 a barrel. Prices drop as concerns over US bank failures and more rate hikes offset optimism over a bullish forecast for Chinese demand from OPEC. Also on the show today, we'll be joined by Mark Matthews of Bank Julius Baer to discuss the SVB fallout and Fed's rate trajectory going forward. And stocks in focus today are Reliance Industries and Cipla. Well, let's get on board our technical guest for today. Then Hemen Kapadia of KRChoksey Securities is joining us this morning. Good morning, Hemen. We saw a steep sell-off coming in the markets over the last 4 days as a fallout of the Silicon Valley Bank failure. But yesterday, we broke below that 17,000 mark as well. However, good news coming in this morning. We have solid cues coming in from global markets. There was a relief rally on the Dow overnight. SGX Nifty is also hinting at a start above that 17,200 mark. What is your own view? Is the Nifty in oversold zone now?
A very good morning to you, Nandita. Thank you for having me. Yes, I think you're absolutely right. Nifty is oversold. And yeah, 17,000. Normally, round figures are psychological supports, Nandita. People would keep stop losses, buy, sell, exit, whatever. So yes, we came to 17,000 perilously. We breached it, albeit intraday, and now we're oversold. So the VIX, which used to be around 12.5, 13, Nandita, has shot through the roof, obviously, to 16 plus. US VIX has gone through the roof. That has also come off a bit now. So frankly speaking, it's all over the place. Bounce is around the corner, like you said, it's an oversold situation. Sustainability of the bounce seems a bit suspect. Excuse me. If there's a gap up, like the Singapore Nifty that you mentioned, I'm not sure if the gap up is going to be sustained very easily. The structure, the setup is under pressure. I mean, it's across the board, Nandita. Even big stocks like Reliance have seen pressure coming in. IT, banks, Reliance, IT and banks have alternatively held the market up or, led to bounces, recoveries, rallies. Now they are also subdued. So frankly speaking, yes, much overdue bounce, a relief. But once again, this would be more of a relief bounce, not a recovery. Yes, we're down from 17,800 to 17,000. So a 300-400 point bounce isn't such a big deal, Nandita.
Right, so expect a bounce in today's session. Let's also talk about Reliance, since you were mentioning that, when you replied to our query. The stock has been among the top losers on the index, but there's news coming in that Jio has unveiled a postpaid family plan for 399 rupees and 699 rupees also. In fact, it has undercut Airtel offerings with its new postpaid plans, because the Airtel's family plan starts at 999 rupees. In fact, CLSA has also come out with a report on telecom stocks. It says that Jio's new entry family postpaid plans actually will renew expectations of subscriber gains. Do you expect Reliance to now bounce back along with the index, given the fact that it has been among the top contributors when it comes to the index losses?
Nandita, thanks. I wasn't aware of this. My whole family is on Jio, and first thing I'm going to do after I finish our show is I'm going to shift to the family plan because we are all on Jio. That's great news. But yeah, we've breached 2293, Nandita, which was a reasonably important support for Reliance. But I think, like you mentioned, the market is oversold. I think Reliance is also oversold. So I believe, yes, I think this would lead to a recovery. And yes, I think the intraday charts also seem to suggest some of the oscillators are in buy mode after showing positive divergence. So yes, a bounce is around the corner. And if we close about 2305 today, I think that would mean a small, at least a short-term reversal, and we can expect some more upside coming in. So yes, bounce, yes. But if we close about 2305, that would add, you know, push in, give that much more confidence.
Right, expect a bounce on shares of Reliance Industries today. Hold that thought, Hemen. We'll come back to you and discuss more stocks and get some viewer queries addressed as well. But let's also go across to Mark Matthews, who's the head of investment research at Bank Julius Baer. Well, good morning, Mark. So good to have you on the show. Let me first ask you about, the Fed's rate trajectory going forward, given the fact that, a lot has changed since Friday. We've seen Silver Valley Bank closure rock the U.S. financial system, and after that, the entire narrative seems to have changed now. Earlier there were indications that Fed would go for a 50 basis point hike, but now, of course, the expectations have been dialed down to either 25 basis points or, in fact, even a pause. Last night we had the US CPI data come in, and the core CPI is still elevated. Looks like the Fed will be in a quandary when it comes to raising rates or not. What are your own thoughts?
You're right about the core CPI being a touch above consensus expectations, but only a touch above. And if you look beneath the hood, the sticky side is mostly in shelter, where we know, because of the lagged effect of the way it's measured, that it will be coming down in the months ahead. And we know that the commodities have been trading very reasonably. They are not rocketing higher. So I think that we're going to get a March reading of about 5.3, 5.2%. The reason I say that, by the way, is because the Cleveland Federal Reserve runs a inflation nowcast of 10 high-frequency data series that they aggregate to try to judge what inflation will be, and it's telling them 5.3% in March. And I think that would be something that everybody would take comfort from. So to answer your question, sorry I've been long-winded, we see 25 basis points next week, and then we think they go on pause, and then we think they cut in the second half of this year.
So cut in the second half of the year. So a pivot is very much at play at this juncture. That's what Mark has to say. But, talking about the Silver Valley Bank collapse, do you think regulators have managed to avert a contagion effect, or do you think this could be another Bear Stearns moment for the U.S.?
Well, I think it's probably more of an ILNFS moment than a Bear Stearns moment, because implicitly all deposits, even those above $250,000, have been guaranteed, whereas you didn't have anything like that with Bear Stearns back in 2008. And this is a small bank. I mean, I was vaguely aware of it, but I can't say I knew anything about it before the incident happened. More skeletons can and probably will pop out of closets, but overall, I don't think we need to panic. And in fact, the big banks will be net beneficiaries of this, because deposits will go from small banks to big banks.
Right. So big banks will turn out to be beneficiaries of this crisis. Mark, we saw a relief rally coming in on Wall Street last night. But do you think that the sentiment is turning increasingly risk-off now, given the fact that gold is above that 1900 mark? In fact, Bitcoin has once again reclaimed that $26,000 mark. What would your take be on equities at this juncture? Do you think this relief rally that we saw overnight has more legs to it?
Yes, I do. I mean, obviously it's extremely choppy right now. And I can't say where the bottom is, but I do think that, well, I don't think that, I know that if you look back in history, when 90% or more of stocks in the S&P are in short-term downward trends, the market has always been higher 3, 6, and 12 months later, and they are in that situation today. So if you put a gun to my head, please don't, but if you did, I would say yes, the market's going to bounce.
Well, I won't certainly put a gun to your head, but yes, markets are looking to bounce back. That's the view. Lastly, what's your view on India? We did have a knee-jerk reaction to the SVB collapse as well. But aside of that, foreign money has been consistently flowing out of India, How does it now stack up versus other EMs, in terms of valuation? Would you still call it a preferred investment destination now?
Well, it's always been expensive, more expensive than its peers, with one brief exception, which was the bottom of the global financial crisis in 2009. And it's expensive because the return on equity is roughly twice what it is for the emerging market universe. I like it. I was in India last week. I was in Bangalore and Calcutta giving speeches, and I was followed by a local fund manager. And in the Q&A session that followed our event, initially, I was kind of perturbed. Nobody was asking me any questions. But then I realized it's a good thing because people were more interested in their own market. And to me, that's the most important thing. I don't want to, I'll just say I don't think it's important what foreigners think. It's much more important what the Indians think about their own market. And there's an equity culture that's developing there that's extremely positive for stocks because it'll enforce greater transparency and corporate governance quality, much like is the case in the United States, where households in the middle class are invested in the stock market and demand that accountability. And the same thing is happening in India. And you can't say that about many other emerging markets in the world.
Right. So those are Mark's thoughts on Indian markets as well. With that, Mark, thanks a lot for taking out time and joining us this morning. I look forward to having a longer conversation with you post Fed's rate decision next week.
Thank you.
Thanks a lot for joining in. Well, let's go back to Hemen then and discuss some brokerage calls that are coming in this morning. In fact, the top brokerage call of the day for me is Jefferies' call on Sona BLW. Now, this stock, day before yesterday, there was a block deal in the counter. Blackstone has exited somewhere around 20% stake. In fact, it has exited its stake in the company. And yesterday, it saw a pretty good bounce back, given the fact that long-term investors have picked up stake in the company. Now, Jefferies has initiated a buy call on this stock with the target price of 575 rupees a piece. In fact, it says that valuations are rich, but it should sustain given its strong order book. Hemen, coming to you, what are your thoughts on Sona BLW then? Do you expect, in fact, the kind of bounce it saw yesterday, would you advise investors to pick up this one now?
Standalone, Nandita, Sona BLW looks positive. I don't have too much of data in the sense we have data for the last 1.5, 2 years or so. Probably not enough to take a longer term call, but yes, I think there is near-term momentum, but everything is dependent on the fact that 400 was an intermediate low. This is also a source of very strong support with whatever limited data we have. This needs to hold. It's possible this holds. If this holds, firstly, we need to overcome 457. And then that is the first time since it peaked at a high of 839.90 in December 21. This is the first time since then we'll be seeing technical green shoots on the weekly chart. What I mean to say, indicators turning positive, the possibility of a higher top, higher bottom. So one standalone, it doesn't look bad, but frankly speaking, the market, it doesn't inspire too much of confidence. But yes, looking at just at the stock, I think it does look promising.
Well, the stock looks promising. Let's shift focus to the pharma basket. Then the Nifty pharma index has hit a 2-year low. In fact, Cipla also hit a 52-week low in yesterday's session. This morning there is some news flow around it that it has announced sale of 51% stake in, its CQCIL. That's a Uganda-based company. To the tune of, in fact, it has sold stake for $25 to $30 million. Given the fact that the stock is languishing around its 52-week low, would you advise investors to exit this one now, or is it time to accumulate on dips?
It would mean a very nimble-footed trader to make money on the stock if one were to go long, Nandita. 1180 to 860. We virtually fallen off a cliff. We are at support level. The 860 is very important support. We haven't closed below this in the last 1.5 years or so. So this is important support. It's oversold. A bounce is coming. But I would say rather than buy now, or if you would buy, keep yesterday's low as a strict stop loss. But rather than buy, I would say if there is a bounce coming, which looks like, I would say sell on bounce because setup has got spoiled. But yes, if it goes down for 5 months in a row, in such a large quantum of things, Nandita, I won't be surprised if we go up 50, $70. But setup has taken a hit.
Well, the setup for Cipla has taken a hit. Let's also talk about Infosys then. This stock hit a 5-month low, recently. In fact, the stock is down as much as 10% in the last 1 month. IT had just started, outperforming after last year's underperformance. And now, it has once again reversed that course. We have quite a few queries coming in on Infosys this morning. Manish Goyal is asking your thoughts on this one. And even Jobin has written in and he wants to know whether it's the right time to buy into this counter. What would you advise?
Well, Manish and the other investor, wait, I believe you'll get everything cheaper. I'll just give in a few data points in terms of levels. Infosys is currently 1420. Support levels come in at 1400, 1368, 1320, 1260. We've been down for 5 weeks in a row. I think it's oversold and riding piggyback on the NASDAQ. I think a 50-60 point bounce is around the corner. But if you're looking from an investment point of view, I'd say buy 20% or maybe 25% right now. Wait, I've mentioned a few support levels which are on the downside. I believe they all could come. So once again, at the risk of sounding repetitive, you'll get everything cheaper. If you're buying now, buy 1/4 of what you want to, bounce around the corner. But if you're investing, wait. Still got a long. It's not got a long way. It has way to go on the downside in terms of time and price both. No rush to buy.
Right, so that's the call on Infosys. The next query is coming in from Hari Krishna and he wants to know whether it's the right time to buy ITC. Now, the stock has been under selling pressure, but it's still closer to its 52-week highs. How would you advise investors to play out this one?
Well, it's had a brilliant run up, Nandita. For 3 years, it was hatching eggs, so to speak. Didn't do anything. Now it's playing catch up. In the meantime, you had the entire FMCG basket, the Marico, the Hindustan Unilevers or the Daburs shoot through the roof. So now it's ITC's place in the sun, so to speak. We post, like you said, Nandita, we posted a fresh all-time high. Looks good. The outperformance even now continues. So I would say buy on decline because the market is going to decline further. I think FMCG is going to be a safe haven. So yes, even in the entire FMCG pack, ITC stands out with the outperformance. But like you mentioned, the selling pressure seems to have stopped the progress on the daily chart. Last 5 weeks, Nandita, like you said, we've gone nowhere. So I would say wait for some declines or at least don't go the whole hog. Split it up, do in sort of an installment sort of a thing. But yeah, ITC looks decently better in the FMCG pack.
Well, so that's the call on ITC. The next query is coming in from Satya CK and he wants to know your thoughts on the banking and financials pack. So, he wants to know whether Kotak Bank or Bajaj Finance is a value pick right now. Bajaj Finance has been under a fair bit of pressure over the last 2 weeks or so. Would you advise investors to avoid that one completely and look at a bank like Kotak Bank, or would you pick something like an ICICI or HDFC Bank now?
At the risk of sounding a bit pessimistic, Nandita, I'd say avoid Bajaj Finance. I'd say avoid Kotak Bank also. I'll just give you the technical reasons. Yes, if you're value picking, you need to speak to a fundamental guy. But on a serious note, yes, Kotak Bank has been underperforming, Nandita. That's very apparent. And now we are getting close to levels which are important. Another interesting data point, Nandita, we are at 1648. Kotak Bank hasn't closed below 1626 on the monthly chart since since July 2021. So it's almost 2 years. And now we've come under pressure to test that level. Now, if this were to break, right? I'm saying if this were to break because we're mid-month, the month is not yet over. So at the end of March, if we close below this level of 1626, we are going to 1550. So no rush to buy Kotak. It's distinctly weak. The setup does not inspire confidence. Yes. And once again, if you're buying bits and pieces with the understanding that you get it cheaper. Bajaj Finance, different than Kotak, but I don't see any technical positives, honestly. Simply put, the sequence of lower tops, lower bottoms continues, Nandita. And for any bull market rally bounce, you need a higher top, higher bottom on the longer time frame. And it's still not there. So I believe further pressure, yes. It is relatively better, not fair to compare stocks, but yeah, still weak.
Right. Any thoughts on the life insurance basket now? We have a query coming in from Pritima Pandey and she wants to know your thoughts on HDFC Life. How does it compare with the rest of the players like SBI Life now?
Well, HDFC Life has come up from 620 to 470. The daily charts seem to suggest an oversold situation. Yesterday, there's a volume spike in the cash market. These are not delivery marking figures, but yes, there's been a distinct volume spike. Weakness continues supported for 450. Limited data because we have a couple of years of data, but longer term charts still suggest a downtrend. So once again, not inspiring too much of confidence. HDFC Life looks weak, but they're all oversold. We've seen a bunch of stocks under in today's discussion. Many of them oversold, and I wouldn't be surprised if all of them give a week or two, maybe a 7 to 10 trading session bounce back. Going back to SBI Life, same story, distribution looks weak, not inspiring confidence, oversold, bounce around the corner.
Right, looking oversold, HDFC Life. Let's also take up a query on the fertilizer pack. Aman Kapoor has written in and he wants to know your thoughts on GNFC. Has come quite, quite off from its 52-week highs of 900 levels or thereabouts. It's somewhere around 500 levels and has lost somewhere around 4% over the last 5 days or so. How would you advise investors to play this one now? Should one buy into it if one is holding on to it? Is it the time to exit or continue holding to it?
Frankly speaking, Nandita, things were just beginning to look good. Technically, at least on the weekly charts, things were improving. Indicators, MACD, RSI, stochastic, all had given crossover buys. There was a base formation in place. Now, just as it started bouncing back, it came under the FNO ban. Now, this breaks the momentum of the stock. I mean, you can't take new positions. So, participation decreases until it's out of the ban list. Today, I think it's still under ban, GNFC and Indiabulls Housing Finance. So, frankly speaking, setup isn't bad. But if it's in the ban, nothing happens. So 507 is very important support. Till it's not out of ban, I'm not sure if one can decipher the moments correctly. So I would say I would play for a bounce, keeping the earlier mentioned level in place. A setup was promising, had been nipped in the bud. So keep a stop loss and wait for the FNO ban to go.
Right. Let's now take up a query on Granules India. How would you play this one, given the fact that it hasn't really done much over the last 1 month? Should one look at this one now?
Well, it's been corrective for the last 2.5 years, Nandita, and it showed a lot of promise, gave a breakout, fizzled out, and we are back to square one. Extreme short term, keep a stop loss of 278, a bounces around the corner. If it closes about we are at 283 right now. If it closes about 295, we could see a bigger bounce. So oversold, bounces around the corner. Bigger picture is going to take time to play out. Whatever technical positives were there a few months back have been completely washed away now.
Right, I want to just squeeze in one more query for today. Sarthi has written in and she wants to know your thoughts on Electra Green Tech. This stock has seen quite a bit of a run up after it has inked a electric bus, contract with RIL. So, what would you advise investors to do? Is this the right time to pick it up?
Well, yes and no. Yes, because the setup is bullish. A weekly close above 740 should take it higher. No, I'd wait for a small correction. The stock has moved from 375 to 745 in a matter of 4 weeks. Okay, there were specific reasons for that. There was a event, this fundamental trigger. But if it goes up so fast, laws of gravity should catch up. In a market like this, I believe you'll get it cheaper. But yeah, it looks interesting positively. And above 740, I'd see more technical positives coming in.
Right, so that's the call on Electra. Well, with that, we're completely timed out. So this wraps up our query segment. Before I let you go, Hemen, leave us with some stock recommendations for our viewers.
Frankly speaking, it's a Hobson's choice, Nandita, looking at the volatility of the market. It's a veritable minefield, so to speak. But nevertheless, two stocks which look like, outperforming. SRF, one can buy SRF at 2300, stop loss 2200, target 2500. Stands out, results were good. looks positive, above 55-day exponential moving average, mechanical indicators turning positive. Second one is a play for a bounce. United Breweries, one can buy it at 1445, stop loss 1420, target of 14995. Deeply oversold, positive divergence, oscillators giving a buy, stock almost given upward key reversal. Looks like staging a recovery, but once again, we're playing for a recovery, not a rally. Nandita.
Right, so buy calls on SRF and UBL for this morning. With that, Hemen, thanks a lot as always for taking out time and joining us this morning and addressing all our viewer queries. We look forward to chatting with you once again sometime soon. Well, with that, it's a wrap on this edition of Morning Trade, and it's a goodbye from me, but don't go anywhere because coming up next is opening bell.